I think there's a trait amongst founders that I've backed where people are stubborn. The founders tend to be stubborn. It's what's got them there in the first place. And so as a VC, I think you need to understand that very clearly and sort of understand the place that character trait plays.
Welcome back to 40-Minute Mentor, the podcast on a mission to raise aspirations and inspire the next generation of category-defining founders, all in just 40 minutes. Today, I'm joined by Dinika Mahtani, partner at Cherry Ventures, the early-stage VC firm led by a team of entrepreneurs with experience of building fast-scaling companies such as Zalando and Spotify. Prior to working at Cherry Ventures, Dinika worked in investment banking and as an operator who was instrumental in the establishment of UberEats EMEA and as general manager at Uber's Jump e-bike product in the UK. Following her time at Uber, Dinika also served as director of finance and ops at ClimateTech startup Kaluza, an initiative by the OVO Group, which focuses on intelligent grid technology. In today's episode, we'll explore Dinika's impressive career story, how she moved into VC, what she looks for when investing in founders, and some great advice for any other operators looking to pivot into the world of venture. So Dinika, a big warm welcome to 40-Minute Mentor. How are you doing?
Yeah, I'm great. No complaints. It's a big week for us here at Cherry and it has been a roaring start to the year. So I feel very privileged every day to do what I do. I'm really glad to be here as well.
Oh, that's wonderful. I'm really excited to hear all about your role and, of course, what you've been up to at Cherry. But we're going to dive into some quickfire questions to get you warmed up, just so our listeners can get to know you. So please finish the following sentences after me. Question 1. The best career decision I've ever made was...
I think that's the easiest question anyone has asked me because the answer is so straightforward for me. And looking back on my career, it was 100% joining Uber. When I did, this was I started working with the Uber team in 2015. When I was an investment banker, I started working with the team in the context of them, raising capital, and then moved my life to Amsterdam, joined them there. I'd never stepped foot in Amsterdam before taking the job and taking the role. It was a big sort of leap of faith that I made in myself, but also the first real sort of meaningful risk I'd taken in my life. And it wasn't even that risky if I look back on it. So yeah, for me, it changed the trajectory of my career. It changed my life in many ways and sort of changed just sort of the proximity that I then had to people who would then shape my career and be multipliers in sort of my life there and going forward.
Amazing. Wow. I mean, what a great decision you made and clearly has huge impact on your life and career. And we've had a number of ex-Uber folk on the podcast, Fred Jones, Tom Elvidge, Cleo Sham, all friends of mine. It's such a unique place and has created this unbelievable talent pool. So yeah, I'm excited to dig more into that and sort of hear more about that experience. Thank you for sharing. The hardest lesson I've learned as a VC is...
that things take a long time, and you have to be enduringly patient with yourself, with your capital, with your founders, and sort of, even though at times you're in an environment where everyone feels like they're in a rush, right? So venture, high growth, high pace, you're looking for momentum. But I think the hardest lesson is staying patient and being able to take a step back when perhaps others feel like they're hurting.
That's really interesting and a common theme actually that has come from other investors we've found on the podcast. So thank you for sharing that. One misconception about VC I'd love to correct is...
There are different flavors of venture capital, right? There's very early stage investing. There's angel investing, that's still a form of venture capital. There's growth stage investing. And at every different stage of investing in VC, the skill set is actually very different. So the one misconception I would say is I think folks think that everyone who works in VC is an extrovert, or everyone sort of works in financial services or knows how to crunch numbers in some way. I mean, there are early stage investors that I know who have no ability to working in Excel. And there are late stage investors that I know who sort of only ever work in Excel. And so I think the one misconception of VC is that it's one size fits all. There are so many different sort of flavors of what being a venture capitalist is. Like, what stage do you invest in? What types of companies do you invest in? Are you vertical specific? Do you invest in software only and hardware only? And really that means like you invest very differently. So yeah, not one size fits all.
Yeah, no, that's an important myth to bust. Thank you very much. And finally, the biggest shift I see coming in VC is.
I'm not sure this is sort of talking my own book necessarily, but I think the biggest shift coming to European venture capital certainly is the inclusion of more ex operators. And I would say sort of this is a shift that's already happened in American venture capital. Europe is a fair few years behind, not in a bad way. It's just the evolution of how technology markets work. Some markets are way more mature than others. And, I think what you've seen in the US is sort of the creation of large amounts of capital that has gone to favor many individuals over time, right? Since the days of Sun Microsystems. And that sort of formed sort of Coastal Ventures, and the old age of VC sort of has always prided themselves in operating. You see this Andreessen Horowitz, like all the large venture firms. And I would say that in Europe, that's not yet been the case. And I say that is very much the change I'm looking forward to seeing, expect to see, would be welcome to see, because I think that makes a better ecosystem.
Couldn't agree more. No, thank you so much for sharing. Well, before we dig into your career and life at Cherry Ventures, I'd love to just find out a bit more about what your early career aspirations were and where this kind of love for startups and entrepreneurialism, where did that come from?
To be honest, that wasn't sort of an early passion of mine. I studied mathematics in college and, wanted to be an investor from a very, very, very like young age, young time in my career. I mean, it started when I started reading S1s, like reading books about like how Warren Buffett used to invest, and then investing sort of my own money in the stock market. And then through different ways, shape, or form, like formed views of my own personally on investing in public markets, investing in private markets. And it was really only sort of after I joined Uber, I would say probably in the first week, that I realized that there was a group of sort of humans and type of people that had a completely different level of like energy, imagination, and a sense of belief in doing and being that I hadn't yet been sort of really exposed to in my career. And sort of when you experience that, it hits you like a wave, and then it's a drug. And sort of that's now been about a decade. And so 10 years, I would say. And I would say sort of it's a big regret of mine in my early career that I wasn't exposed to this sooner. That said, no time like the present. And I had sort of tons of years of beautiful sort of life experiences and career experiences that still sort of have been able to translate into sort of this venture career that I've built for myself. But maybe also the first myth, I think, of VCs or people sort of in startup world is that you have had to live this from when you were teenagers. Like not everyone's been coding in their bedrooms when they were 12.
Yeah, it's so true. And as somebody that also kind of came to this world later, albeit in a different setting as a headhunter, it's just that as soon as I started connecting with founders, I realized as a founder myself, I was like, wow, this is the future. This is where I get my energy. And you can have a really unique sort of lens from my position of placing executives into some of these fast growing companies. And it's a really amazing space to be in and to see those people up close. So I completely agree. I'm gutted I didn't do that earlier, but still, I'm trying to make up for it now. And the last decade has been amazing fun. You mentioned your experience in banking earlier. I'd love to find out a bit more about those sorts of foundational years in banking and financial services and how that prepared you for the world of tech.
It was a grind. It was awful. I mean, it was
Appreciate the honesty.
brutal in terms of number of hours, the demands. It was also in a time where like very senior male managing directors would ask me, an analyst or associate, to a meeting just because they thought I would be able to make small talk and take a meeting in a different direction to the one that they anticipated in. So also in a world where, I worked sort of ancillary to a trading floor, and they would invite sort of girls up to take bets, but only sort of the hottest girl of the month kind of thing. So it was that time of banking. It still exists today.
Sadly.
And I would say for me, it was just quite a rude awakening to sort of the working world. and one where sort of I built up a lot of my tough skills, sort of ability to say no when no was meant to be said, but also it was in an environment where I was always sort of pushing myself in my own limits to doing things faster, because the work as sort of a banking analyst and associate is very menial. You're sort of working on your computer for like 10 to 15 hours a day, and sort of it's not a ton of sort of imagination and value added thinking. And so, in understanding that you want to be someone that learns and thinks outside the box and all of that, I used to just think of ways that I could make my job way easier for myself. So either leveraging technology, trying to learn shortcuts faster than anyone else. And so it was foundational for sure. It trained me for sure. And I think it taught me resilience, like a really strong way of just being able to navigate the corporate world, which in itself is a skill. And it comes in very handy today because as part of my job is to navigate our LP base, right? So large endowments, banks, fund of funds, folks who give cherry money to invest. And even though that's a pretty intimidating world, it's not that intimidating to me today because it's one I used to really work in. I'm able to navigate it. I know the characters, I know the process.
Great. No, that's really interesting. Set you up for success despite it probably not being particularly enjoyable at times. That's definitely heard that before. Thank you for sharing your experience. Well, you left to join Uber in 2016 and worked at Uber Eats and on Uber's e-bike product, Jump. What attracted you to Uber at the time? Clearly, you'd seen them through the banking lens, but yeah, would love to know what made you go for it when you did and some of the kind of
Yep.
key lessons you learned during your time there.
Yeah, absolutely. Well, the first of it was familiarity. So I was working and was familiar with parts of Uber's team in San Francisco because I was a banker, and a lot of these Uber famously hired a lot of ex-consultants and a lot of ex-bankers. And there was a team sort of reporting under the CFO, most of them who had jumped ship from Goldman Sachs. So when I was working with this team, I saw parts of myself in them. And I think it's really interesting because as a banker, I'd worked with lots of corporate clients, also many tech companies, but this was sort of the first team that I think demonstrated personality traits to one I saw in myself. And so even though it was a very big shift, I took a 60% pay cut. I looked to them as sort of like hey, if these guys did it, hopefully it won't be so unfamiliar for me coming from an extremely corporate environment and going to one that's fast paced. And then I would say the interview process and sort of talking to people also made me understand how magnetic the company was for other humans and individuals. And I was also privileged enough to be able to see some growth charts when I was on the other side of Uber. And so I was like, well, at the very least, this is going to be a very fun experience. But I will say that, when I joined Uber, my role was a multifaceted. I worked on many different things at many different times. So a part of my role was working with the Uber Russia business. I was also running pricing for Europe, the Middle East, and Africa. And all of that was sort of, strategic. And with every one of sort of my role transitions at Uber, I would say like within the company, I had the best mentors, some of the leadership team, like from my boss who was based initially in Amsterdam, but then San Francisco, who would give me an opportunity that was probably like 3 times bigger than the one I had at the time and said, run with it. And I would be like, are you sure? And they would just be like, just run with it. And I got promoted at Uber 4 times, was in rooms, not just with, Cleo and Tom and the like, but like, folks at the board level who are making very strategic decisions at the company for the company. And I would say sort of, it was the definition for me of like pure meritocracy because I worked pretty much more than I did as a banker, I would say, which is funny thinking about it. But my job satisfaction was probably 10 times higher. And if your question was sort of how I moved like into these different sort of roles, I think that the truth is with high growth companies, there's typically way more opportunity than typically meets the eye. There's always sort of new business lines, new product lines. And if you're an enterprising person and you can spot any of this opportunity, it can typically be yours for grabs.
So true. It's why it's such a great move. We often get We often speak to candidates that are looking to pivot out of consulting or banking and make that move in. And I think you tend to be able to see the few that like the idea but wouldn't actually be that effective in that environment versus the ones that really would thrive. Because with those that it's right for, it really is just, it opens so many doors.
For sure. That said, I think you need to be in the right time of your life, though.
Absolutely.
I'm not sure I would have been able to make that now with like 2 kids, because you need to make a lot of personal sacrifices when you take a role like that. But for a certain time in life, it is the perfect like opportunity.
Totally agree. Yeah, thank you. Well, you ultimately, had a very successful time at Uber and then made this transition into VC in 2021 when you joined Cherry Ventures. So, why did that move come about when it did, and what was it about Cherry that really stood out to you?
Yeah, 100%. So I was navigating sort of a move, and my passion, as I mentioned, was always in sort of investing as an intellectual topic. And so at Uber, started advising some of my colleagues who then became founders on like starting their companies, helping them build their pitch decks, business plans. That happened pretty organically. And then started organically writing angel investing checks at the time into ideas, founders, people that I thought had the right combination of hustle, drive, and business idea. And so angel investing was something I was doing on the side. And a number of my ex Uber colleagues in the States had made the transition into venture capital. And so were also telling me, hey, I think this could be like amazing for you. And why don't you explore this in Europe? And now at the time, a lot of people were also like, you should never join a European firm. They're way more conservative. They don't take enough risk. You'd just be bored. Most of them are sort of career VCs anyways. And so it would be, a much different pace for you. And so initially I had understood that and started just continuing angel investing. And I thought I would be a career sort of angel investor, maybe take like a C-level role at a scale up and sort of move down that direction. But then started getting sort of lots of inbounds from VCs and recruiters who were mentioning that people were looking for folks with operating experience. And some folks had seen me on cap tables, right? Because I was angel investing. And so the story has been told before, but I suppose I started talking to everyone in the industry. But I think what was super important for me was I gave myself a year because I wanted to make a transition. But the most important thing I understood about venture from sort of everyone I had spoken to and all the desktop research I'd done is that this is like a long game. This is not like an operating gig where you can go in there, sort of make impact in 2 years and then sort of leave. And so you need to be 100% or very close to it, sure, about the fit and about sort of the style of investing. Coming back to my first point. So what stage are you comfortable in? Are you numbers literate? Like what kind of investor are you? What stage do you want to invest in? Do you want to work for a European firm? Do you want to work for a US firm? Is being a partner important for you? Is how much capital do you have to like invest in the fund? Do you have capital at all? And so the other question was like, do you want to start your own fund? Do you have aspirations to start your own fund? So like it's a very sort of complicated matrix of questions. And for me, I think at the stage of life that I was at, I was looking to make sort of a longer term commitment on a path. And so that's why I gave myself that time. Why Cherry? It was plainly obvious to me that there was a big opportunity in Europe where there weren't operator-led venture funds. And in my view, that was alpha, like alpha just by creation of the concept, really. And then if you think of, and yes, the world has changed since then, and there are more of us. That said, the ability to do this and sort of run a firm, but not a fund, and do that well by being sort of really thoughtful and then backing companies that become global companies with our model was something I wanted to be a part of. So the other opportunity with Cherry was that I would be setting up their UK presence, opening their UK office, and sort of having a bit of an entrepreneurial part of my job that I couldn't say no to, because again, the impact that that would create and sort of what I knew from my time at Uber and sort of extrapolating that going forward, if I bet on myself and that was successful, could be massive. And so it was a no-brainer, but it took me a long way to get to that.
Yeah, well, it certainly you picked the right horse, back the right horse, and clearly there's a lot of. I've seen this from operators looking to move into VC. It can take a long time. Actually, know a few people that it's taken years of conversations. They eventually got into the right role, but you have to. It is something you commit to for, you have to do the time and have the conversation and really think deeply about what it is you're going after. And clearly, it's worked successfully for you, Dinika, which is great to see. I think if you think back to that transition, I guess we want to try and help any other operators that, really love the sound of the journey you've been on, that want to make this move into VC. So what advice would you share with them? Perhaps anything you maybe found harder, or just things that you think they should be thinking about as they go into that transition in their career?
Yeah, 100%. I think there are a couple of really big things. The first is you're kind of working by yourself as a VC. You don't have the benefit of a team. And so while of course I have a team now at Cherry and we spar a lot, in reality, most of my work is solo. I'm talking to founders by myself. I'm thinking by myself. I'm coming up with investment theses by myself. And like I say, for sure, with the support of a team, but really founders want to pick me to back them, to be their board member. Of course, with the support of the Cherry brand, the rest of the Cherry partnership. But the nature of the job is solo, and it can be lonely if you don't have a community to sort of go on the journey with you. So that's the first thing. And it's like a really, really big thing also in the transition from being an operator. The second thing is, like I mentioned, time to value, or time to seeing your own success. While obviously people know this in their head that it takes a little bit of time, I think there have been people that I've seen in venture do this for 10 years, 12 years with no sort of big signs of success that continue to do it. I think that's fine. But I think you also need to be truthful for yourself when you're making the switch from operator to VC, and give yourself a couple of real milestones, because it can shock you at the end of it when you sort of put in the time and you're like, oh, wait, what? I spent all this time, and is it going to be worth it? And so after sort of 2 years, 3 years, understanding how many companies you've invested in, how many opportunities you've won, how many you've lost, why you've lost them, how many markups you've gotten, how your companies are doing, assessing your own portfolio, and then seeing if that's scalable for sort of the next 3 years, and being able to determine success your own way is super important. No one, as an operator, that's so clear. You see your own results sometimes within weeks. And as a VC, you have to set that for yourself, because no one's really going to do that for you. Sometimes, in Cherry's case, we discuss that as part of my onboarding at Cherry, my continued progression at Cherry, and my promotion. But being metrics driven in VC and sort of understanding what success looks like is very rare. And that's what I've understood through folks asking me about my journey and me openly talking about it. I think the one sort of biggest differentiator has been just being able to be super clear about what progress looks like in this job.
Today's episode is sponsored by eCap Financial, your trusted partner for fractional CFO services for companies looking to fundraise or go through an M&A process. Whether you're a founder looking to raise investment, planning for an exit, or navigating financial challenges, eCap Financial, led by the brilliant Corinne Thompson, helps scale up, secure the right funding at the right time. In 2024 alone, they've raised over $100 million for companies across deep tech, health tech, climate tech, compliance tech, and data aggregation. Alongside this, they completed financial due diligence for some of the best known investors in Europe. With years of experience in deal structuring and fundraising, alongside working with investors on the investing front, Corinne and her team provide expert advice to ensure you make the best financial decisions for your business growth. Make sure you check out Corinne's bonus episodes launching throughout the VC feature season, and to find out more on ecapfinancial.co.uk. Now, back to today's 40-Minute Mentor. Cherry Ventures has backed some really well-known companies across Europe: Flixbus, Toolradar, Infarm, one of JBM's long-standing clients, Manual. Can you share a bit more about the fund's investment thesis, and I guess what founders are a great fit for Cherry Ventures? Because I'm sure there's going to be people listening to this wanting to pitch to you and impress you. So we'd love to know what helps them stand out from the crowd.
Yeah, 100%. We're drawn by ambition, like raw ambition. Founders that will break down doors to get things done, founders that have global ambition, founders that understand that when they work with Cherry, they get a partner who's going to drive them to be even more ambitious than they can imagine themselves. And ultimately, folks who are willing to take big risk, but create sort of generational companies. And so I think of founders when you ask me the question, and it's really easy to point to what that means. I recently backed a team based in the Baltics. When I asked them what success means to them, it's creating generational wealth for everyone in their country. And when someone is so clear about sort of impact that they want to make from sort of their tiny startup that's barely doing any revenue, yeah, that's super compelling. And when they have a clear path to understanding how they'll get there is even more compelling. And you know what? You don't always have to have sort of a grand ambition, but sometimes it's just enough to just be raw in your determination and ambition to just make something successful, right? If you've been underlooked in the past, and that's sometimes something we see often as well.
Love that. Thank you so much. And I guess on the flip side, what turns you off? What are the things that kind of founders get wrong when they're pitching to you?
I suppose it's asking for too much money upfront when they don't have things to back it up with. And so, we see many pitches where someone's asking for 8, 9 million. And when we're asking why, I have like very loosey-goosey ideas around like why, because pedigreed founders sometimes can raise that kind of money. They just do. I think there's one thing of being ambitious, and there's another thing of understanding sort of what you want to do with the money and understanding how you want to use the money. And obviously, it's a completely different story if you're raising 8 million, but completely have a clear idea, like how you want to build a company, grow the company, and take it to sort of a 10x different level than if we gave you 2 or 3. And then the other turnoff for me is founders who don't listen at all. And what I mean by that is I think there's a trait amongst founders that I've backed where people are stubborn. The founders tend to be stubborn. It's what's got them there in the first place. And so as a VC, I think you need to like understand that very clearly and sort of understand the place that character trait plays. But at the same time, I think particularly for a lot of first-time founders, we've seen quite a lot from either portfolio company examples or our own journeys that we're happy to share. And yeah, I think for me, it's if someone completely dismisses you without reason for the sake of it, that for me is also not great, because at the end of the day, like we want to see founders who are and entrepreneurs who are multipliers, who are happy to multiply themselves over time, grow, develop, like be a sponge of information, be a sponge of feedback. And that's a really important trait. It's very rare, obviously, that you find someone that's perfect, that has all these traits. And so I think the anti of that trait is, when you hear someone who basically just argues with you all the time, even from the off, and does it even though you have something really great to add sometimes, potentially.
Yeah, totally. Thank you for sharing that. Important advice for anyone listening that might end up in front of you. So thank you. You were promoted to partner earlier last year, which is obviously an amazing achievement and very well deserved. Can you share a bit more about your transition from principal to partner and your advice for anyone that might be maybe in VC at the moment seeking to follow a similar path? How did you go about doing it?
Yeah, so there is some difference between the roles. I say as a partner, you're managing the firm alongside doing investments, alongside building your brand, alongside all of the other things you do. So the job only gets a little bit harder. The other important thing as a partner is like you're committing to the firm just also by signal and by capital, because most partners buy into the firm. And so that's a really important thing for people to know and understand. And the reason for that is because LPs want to see that you have commitment, and commitment means many things, because they're backing you, right, to run sort of a fund iteration for 10 years. So that's a difference. The other difference is you broadly have to be representing the firm at all times rather than just yourself. And while sort of I was already doing most of that as a principal, it just becomes much, much more um, visible, when you're a partner. I would say those are the main differences in terms of sort of what helped the transition or what got me there. It's what I mentioned in the past, which is I think being very clear about what you need in each of the roles to succeed, what succeeding as a principal look like. And for me, to be honest, like given that I knew that I wanted to build a long-term career in venture and at Cherry, for me, the first year was a confirmatory experience. It was, what do I need to do in order to show that I can sort of do the job really well? And what would that mean? And so I think that clarity at every fund means something different. But I think having that very clearly defined for me was important and vital. Otherwise, it would have been so hard to know sort of if you're doing well in a job that like is pretty nebulous with long cycles of affirmation and validation.
Yeah, yeah, that's really helpful. Thank you very much. It's no secret that VC still has a little bit of a way to go when it comes to promoting and hiring more diverse talent into senior positions. But there is a shift, but I think there's still lots more that can be done. So, what do you think there needs to happen in this, I guess, both the VC and tech ecosystems to see more diverse representation?
Yeah, I think it's something that everyone needs to champion. I will take a step back and just reflect on from the moment I joined Uber all the way till today. My biggest internal champions at all of these organizations have been men. None of them have been women. And so I think that there needs to be, of course, and I do this sort of very visibly and very audibly in the sense of like supporting women entrepreneurs, funding women entrepreneurs, allowing them to have the opportunity to take risk so that they can see what the journey is like and then be able to build their next company, which might be even better than their first one, and getting the flywheel going. But I would say there have been a lot of really great steps in the direction of angel investing programs, syndicates that are meant to get sort of investors in and on the journey early, right? If you have a little bit of capital, have sold a little bit of money in a secondary round, if you're a scale up, you should be sort of looking to get in on experiencing what it is to be an angel investor on a cap table. And then maybe you want to professionalize that over time. And how do we convince women to take more risk earlier in their careers, and that working at a startup or a scale up is not that much more risky than working as a consultant? And so there's quite a lot of education to be done. And I would say I've been really positively surprised that the industry has evolved hugely since even I joined, definitely since when I was recruiting, in that there are countless number of very senior, very capable women who are in my orbit, who continue to allow me to do my job well. And I think that will only get better and stronger. In our Cherry office in London, I have an associate who's male, everyone else on the team is female. And sort of things are certainly moving in the right direction. What can people do? I think more of the same. I would say, even though there's a shift in the other direction now, promoting diversity, promoting equality, bringing up people who have not been sort of brought up sort of in the past decades is no longer like an outward priority. I would say if folks want to do it now, it's because they want a better world for themselves and their daughters, and less from sort of a mandate standpoint, which I think is going to shift, right? We're going to see a lot fewer mandate-based decision making.
Yeah. Thank you so much for sharing. We're sadly at an end. We got our two final wrap up questions. I've really enjoyed this conversation, Dinika. So thank you again for being a 40-minute mentor. And that's the name of this podcast. So I have to ask, if you could be mentored by anyone, dead or alive, who would it be and why?
This is a tricky question because I'm drawn to folks who have experienced failure in some way, shape, or form, and who have experienced sort of ups and downs, and whose careers have not been linear themselves, but also people who are enigmatic. In technology, I would have to say the person who stands out most to me is Steve Jobs. Like being able to be mentored by him, I think would only push me to greatness 100 times bigger than what I know. And I think that there are people who see sort of things that other people don't, and you always want to be in those folks' orbits. So yeah, it would be Steve Jobs.
Okay, that's great. Great answer. And finally, what is one final piece of career or life advice that you'd like to leave our listeners with today?
take a risk on yourself, believe in yourself and your abilities, because for the most part, you're underselling yourself always. And I feel like even when I meet the most brilliant people, most of them, sell themselves short of their potential. And I've only seen that sort of in myself, right? Like sometimes you need other people to believe in you when you don't believe in yourself. And I've seen this in my career so many times. But in reality, if you don't have those champions, and many people don't, you have to do it yourself. So whether it is being an entrepreneur, whether it's like trying to go out on a limb and find a co-founder that you've never dreamed of sort of approaching, whether it is taking whatever sort of risk that you want by backing yourself. Like I use the word multiplier a lot, but the word is sort of the most important word that I think I've learned in my career when thinking about my career trajectory, because when something has worked, it's never been like 1+1. It's always been a 1 times 10. And I think you always want to be looking for opportunities like that.
Such a great piece of advice to leave us with. Thank you so much, Dinika. It's been an absolute pleasure and privilege. Wishing you and the charity team all the very best for the year ahead. It sounds like there's lots of exciting things in store. And yeah, thank you for being a 40-minute mentor today.
Thank you.
Cheers. Thanks so much. Thank you so much for tuning into today's episode. I really hope that you found it useful and inspiring. If we have left any questions unanswered, or if you have any feedback or guest recommendations for future series, then please make sure you get in touch on info@jbmc.co.uk. I often get asked by listeners how you can help us spread the word about 40-Minute Mentor. There are two simple ways you can help. Firstly, share this episode on your preferred social media platform, and LinkedIn is probably where I'm most likely to see it. And you can also leave us a review on either Apple Podcasts or Spotify. Every share on social media and review left on the podcast platforms really helps us to get 40-Minute Mentor in front of new audiences and share the power of mentorship even further. Thank you so much for your ongoing support, and I look forward to seeing you again next Wednesday for even more pocket-sized mentorship.